I've gotten turned on to the Infinite Banking System, and it's basically a specially designed whole life insurance policy where you can use it to become your own bank for your benefit. How you could use it in the real world with a case study. Hey, I'm Rebecca. Thanks, friends, for joining me on the Mama Lorian Way, where I like to talk about how we can use money to our benefit and just kind of make our lives a little bit better. Recently, I've gotten turned on to the Infinite Banking System, where you put premium deposits into a specially designed life insurance policy, which you can borrow against and eventually pay yourself back, and you rinse and repeat. I'm working with a company called the Money Multiplier. I'll probably do a video on them as my progress progresses. But today I wanted to look at how you could use this idea of the infinite banking system in the real world. Our house, we've got a little bit, it's a sweet house, but it needs a little bit of repairs, and we're looking at how we can use our infinite banking system, our policy, to do some minor repairs. What is infinite banking? Infinite banking is using a very specially designed whole life insurance policy as your personal banking system. You put in deposits to your banking system as policy premiums. It's easier to think about as deposits instead of paying an insurance company. You're depositing money into your banking system. Then you can draw loans from your system, and it's loans against your death benefit, which is pretty cool. Your banking system in action. Say you've been really smart and like a little caterpillar eating all the things that you need to eat to get really fat. You put $40,000 into your account because you've been smart and you've saved for your future self. Then you realize, my house needs a little TLC. You need $25,000 to do some painting, some new doors, baseboards, whatever. You borrow that $25,000 from yourself. You borrow it within your policy, within your banking system. And you can borrow up to a percentage of what you've deposited. I think it's between 80 and 90%. I'm just doing safe. We have $40,000 in, borrowing $25,000. Now, this $25,000 loan just decreases your death benefit until it's repaid. And kind of in theory, you could pay interest on it because you're paying interest on it, but you would never even have to pay this loan. It just gets knocked out of your death benefit. Sorry, kids. We use your inheritance. All right, here's the good stuff. Your $40,000 in your banking system earns uninterrupted compound interest at about 6%. So you take this loan, but you have $40,000 in your banking system earning uninterrupted compound interest at 6%, which annualized equals about 6.18%. So you get this. You put in $40,000, kind of like into savings. You take out $25,000, but you're still earning returns, dividends, interest, however you want to call it, on the money that you have in your bank. What other bank can you put in money, almost immediately take out money, and keep earning interest on the money in the bank, even though you've pulled out some of it? More good stuff. Your loan to yourself is at 5%, meaning you're getting a 1.18% gain on money that you're using. What? Then you pay your loan off as works for you. You could do it as quickly as possible. You could pay interest only. You could do any combination. So maybe you're really flush one month, you pay off a whole bunch of it. Not so flush the next month, maybe just pay interest only. There's no credit check, so no ding on your credit for this. No loan fees. There's no huge applications where you have to provide all the paperwork under the sun to get a home improvement loan. It's there. You can pull it out. What do the numbers look like? So this is just total numbers. So you say you have $40,000 in your banking system making 6.18% annually. That is equal to $2,472. I'm making this simple, but let's just say it's making that annually $2,472. You take out your $25,000 loan at 5%, that is $1,250 in simple interest over the year. So you take your $2,472, that's your gain, minus what you're having to pay in interest. You're getting Check it out. $1,222 gain even after paying interest on your loan. Yeah, you do have to pay that $25,000 back if you want to rinse and repeat and keep going through your infinite banking system and making your money work for you. I think this is pretty cool. I did start my banking system, my policy. Actually, I'm in approval for it right now. It should start in about 2 weeks. I'll keep reporting on how I'm using my banking system and how it's working for me. I appreciate you guys just using knowledge to make your life better. Like and subscribe. I will catch you on the next one.